You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. Merry Christmas, Bob.
Yes, Jim, and a Merry Christmas to you, too. And we're also getting what they call the Santa Claus Rally. And I don't know whether we mentioned it last week or the week before, but of course we watch for that, and then, the tape going across the screen at the bottom. You can tell it started when you see the symbol going by, H-O, 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 as in ho, ho, ho. And ha, 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 who's got the last laugh now? But, they've got senior indexes to new highs. Of interest is that the Shanghai stock market has been going straight up since summer, and they had been in decline for a number of years, and now they're getting on the bandwagon. It's been smoking. So, and as I say, the other ones have been doing well here. Now, what was it, a week and a half ago when everybody was concerned about crashing oil prices and the junk bond was crashing and all that, so we had a downside capitulation on the junk bond and put out a quick memo saying sort of cover shorts. I mean, that was pretty good. So, but on the key one here is the crude oil. This is historical stuff. You haven't seen anything like this since 1985-86, when the price of crude oil was allowed to decline generally from the high then was around 35. I think in November or December of 1985, it was at 31, and then by March or February of 86, it was down to 10. That was a killer. And that helped financially break the Soviet Union, or that was then the beginning of the end for them. And certainly since the summer we've been talking about, number one was that the oil fracking revolution going on in oil production and natural gas, that we thought that where the price structure for natural gas had come down huge to, let's call it, a new regime, we thought the same thing would happen with crude at some point. That when you had the rallies and the sell-offs and everything else, you were eventually going to net in that increase in reserves and production. So that has been working. And then the other one is the geopolitical one that we mentioned. And then you have a tendency for crude oil to sell off from, say, late September, early October, down into December or January. So that one we're working on. And then the other one is the count on a crash like the big high in 2008 and other severe declines in crude oil. They've typically run 6 or 7 months. So January would be the 7th month. And we don't expect a V bottom on the low end here. For crude oil and the oil patch stocks, it could be a couple of months thrashing around before the bottom is actually established. So I wouldn't be too eager to take positions. And also, like a lot of the junior stocks, I think they should have a severe clean out the way the junior stocks have had in the gold business. So, but the other part of the equation here is not to be too gloomy, but you got chart going way back showing the U.S. recessions, how they always show it in a vertical shaded bar, and the price of crude oil. Well, major significant cyclical declines in crude oil have been associated with recessions, but at the moment in the U.S. they got the strongest GDP number in a decade, and they're getting really dynamic growth. But let's just watch and see how this one goes. I think that it's a cyclical turn for many commodities. They've been weak and declining. So the other one, the only group that is looking good and continues to look good are the grains with the GYX symbol on stock charts, and continues to act well, progressing up. Now, what we'd look here maybe in the next week or so, see if it's getting overexcited and due for a correction. Base metals remain foundering around. Base metal stocks have had a rally in here, a beef one. But we think that there's it needs more work before you can say there's a bottom in on that one. And what else is going on here? Oh yeah, we've got the major stock markets. Often you can have a seasonal high at the turn of the year, somewhere late December, early January. It's certainly very vigorous now. You expect a rest. And the other thing is the junk bonds. We're watching those now, a little more up in those, and they'd be getting overbought. The long bond future on treasuries has been an outstanding rally, and it's up and approaching some speed line resistances. This is all highly technical stuff. Could go a little further, which would be fine, but we're looking at potential topping action in the long bond. And we should also understand that the whole bond community is one item, and of recent you've had up for long treasuries in price. At the same time, you had a very severe decline in price for junk bonds, particularly those in the oil patch, which is quite understandable.
We'll have more with Bob Hoye right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with market historian Bob Hoye, Chief Investment Strategist for Institutional Advisors. Bob, I know we always take a look at our markets and how some things may have gone down, although overall they were good. But if you're in Russia, their stock market, their currency, their economy has just been hammered by the downturn in crude.
Yeah, also sanctions, but I don't think sanctions change the business cycle. Their interest rates had been rising for a couple of years when, say, yields in Italy or Greece had been declining. But then they went up, and recently they rallied right on up here to, how high was that?
17%?
Oh, it was 16.5% for their 10-year note. And then it backed off to 13.5 a couple of days ago, and now it's at 13.57. And as you mentioned, and as we're reading, the authorities are getting a bit desperate about this because the ruble had come down huge from about 80 to 30 relative to U.S. And then that marks up the price of goods and services at home in Russia. And so people who had money were buying cars very quickly because the price were advancing. And this is, at the end of it all, it's uneconomic decision making. And then recently here they're urging people not to convert and take money out of the country. So the authorities are getting pretty desperate with that. So, but it's too bad it happens to the people because it's the government that's gone out of control with Putin's ambition. And unfortunately, this combination of a number of reasons why crude went down, the net one is that the neo-Soviet Union is starting to run out of the good stuff. And also the crazies in the Middle East, they've been dependent on good oil prices. And so it's overall constructive for the prices coming down. But it hasn't been too kind to the precious metal sector. But overall, we should just note that in the first part of last year, from around Christmas on, there was a very good rally in the precious metal sector right up until May, and the sector became very overbought, which we noted at the time. And then re-entering here has not been easy. In September, we thought maybe there would be a buying opportunity for gold stocks late in October, and then when we got to middle October, we thought, it's going to be too early. So a couple of weeks ago, we said that we could begin to buy a little on the gold stocks on the next bit of weakness. But what we need overall in the gold sector would be the price of gold shares outperforming bullion, and that was a long, nasty bear market down to recent. There's been some recovery, and then that low needs to be tested. And then the other one for a pretty good rally in the sector, you'd want to have silver outperforming gold, and that has not been happening. It's stabilizing like the sector. So I think the view is wait until the new year, and then a bit of weakness. in the sector begin to accumulate a few more of the gold shares. So,
Bob, your overall outlook, say, for the start of 2015?
Oh, gosh, some people come out with overall projections for the year, and then we've seen a number of methods where they try to get what interest rates will be at the year end and what the stock market level will be, and there's going to be too many swings in the markets to give a level on the S&P a year from now. That's a bit of a mug's game. But we're looking at overall a very pricey stock market that to some degree has been force-fed, but it's been certainly clocking exuberance and momentum and everything else. And let's put it this way, it's vulnerable. So when it actually peaks and rolls over, we don't know, but we wouldn't be aggressive buyers in here. Same sort of holds for long treasuries. Getting pricey. It's had some exuberance. Might get a little more. So that's vulnerable. And then the other sector, lower grade stuff, I mean, you just can't, that's, we're out of there kind of thing. From the price on lower grade junk bonds and everything else all peaked out in June, and we said bye-bye. So I think for an investor, it should be in 3 to 4 year good grade corporate bonds. You get a bit more yield out of there rather than over treasuries or government of Canada. And at that term, 3 to 4 years, you're going to be avoiding term risk as well, where the long end may take on some big price springs. So it's a good, comfortable place. And then for Canadians, you can get further play out of the U.S. dollar. I think it has further to go up. And so we wouldn't rush into buying ordinary stocks. We would look to accumulate some gold stocks. And that's the outlook for the year.
Bob, thanks a lot for chatting with us.
It's been good to work with Jim. We've had a very interesting year, ups and downs and everything else, and I'm going to wish you and all our listeners a very happy Christmas and a very happy New Year.
Happy, merry to everyone.
Happy, yeah.
Thanks a lot, Bob.
Okay.
My guest has been market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. The website, institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward comments about the show to info@HowStreet.com. Happy holidays, everyone. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.